Every single year you delay investing, even by just $500 a month, could cost you more than $41,000 in future wealth by age 45. According to conservative compound interest calculations, if you're working hard but can't shake the feeling that your money isn't working nearly hard enough for you, you are definitely not alone. But here's a truth that most people get dead wrong. Reaching $100,000 in net worth is not just 10% of the way to $1 million. It's actually the hardest part of the journey, and missing it early has huge opportunity costs. So, what exactly are the 3 magic net worth milestones that flip your financial momentum into overdrive, where your money starts earning more than you? Stay tuned, because I'm breaking down the dollar-by-dollar math, debunking common wealth-building myths, and giving you a checklist that could save you decades and hundreds of thousands. This is the transformation that changes everything, and it's 100% based on real, proven numbers, not hope and hype. Let's get something straight right out of the gate. Most people think wealth building is like stacking bricks, slow but predictable, one block at a time. But in reality, it's more like building a snowball and rolling it down a mountainside. At first, it feels like you're barely making progress. Your wealth creeps upward almost invisibly. Years go by, and it can seem like no matter how much you add, the pile in your investment account refuses to grow at the pace you hoped for. But then, suddenly, the momentum explodes, and your money starts multiplying itself. That shift isn't magic. It's mathematically inevitable if you hit some very specific net worth tipping points. And today I'm going to show you exactly where those financial snowballs turn into avalanches. Real talk. My name is John, and for years I obsessed over why some people break free from paycheck-to-paycheck cycles, while others never seem to escape. I've run the numbers, pored over compound interest tables, and after countless spreadsheet simulations, I can promise you, there are 3 absolutely critical milestones that most people miss. And if you understand and hit them, you can fundamentally rewrite your future net worth. Before I reveal each tipping point and the dollar amounts you need to know, let's reset some common myths and walk through a scenario that most viewers, whether 25 or 45, can relate to. When people picture wealth, they imagine day traders glued to screens, heirs with trust funds, or some mysterious genius making moves the rest of us can't even see. But as boring as it sounds, the truth is far simpler and far more attainable. Building significant wealth doesn't require the highest income or most risky gambles. It's about seeing your money grow exponentially, not linearly, and knowing exactly when that change kicks in. Still skeptical? Let's bust the first big myth head-on and see how 1 year's delay can cost you huge. According to Vanguard's 2023 study, the average annual return of a broadly diversified stock index fund has historically hovered around 7%. If you invest $500 a month starting at age 25, by age 45 you'll have about $244,000. Start at 30 instead, and by 50, you're looking at $210,000. A difference of over $41,000 just from waiting 5 years. That's money you can never get back, purely because compounding didn't have enough time to work its magic. And this is where our 3 milestones come in. Hitting them as early as possible is key, not just for the number on your balance sheet, but for the freedom and opportunity those numbers unlock. Let's break them down one by one, diving deep into the math, the psychology, and the practical reality of each. First, we set our sights on the legendary $100,000 milestone. I call this the compound catalyst, because it's the first time your money starts doing any serious work for you. The run-up to $100,000 is painfully slow for almost everyone. Let's do the numbers together. Set aside $500 a month, grow it at a 7% annual return. Reinvest every penny. And it takes about 7 years and 9 months to crack $100,000. That's 93 months, or nearly 8 years of disciplined investing. I want you to think back to where you were almost 8 years ago. Isn't it wild how fast life moves, but how slow money feels in the early days? But here's the counterintuitive part. The myth most people believe is that $100,000 is just 10% of the journey to $1 million, Sounds logical, right? But it's wrong. It's far more like the first 40% of the actual grind. Why? Because in that initial phase, you are doing almost all the work. Of the first $100,000, only about $54,000 is growth from investing. The other $46,000 comes straight out of your own pocket. Compound interest up to this point is basically warming up benched for the early innings. And yes, this is discouraging, which is why so many people abandon the journey before compounding ever gets a chance to shine. If you want proof, pause the video and comment. Did you already hit 100K? Are you working toward it now? Drop your experience below, The Money Masters community needs to hear real stories. Now let's see how that changes once the machine kicks in. Hit $100,000, and every dollar you invest from now on compounds faster. It only takes another 5 years to hit $200,000. That's right. The second $100,000 comes in just 60 months. 60% of the time, it took the first 100K. And this time, your investments themselves contribute the majority. Of your $200,000, just $78,000 is personal contributions, and a massive $122,000 is pure compound growth. The labor is shifting from you to your capital. Here's a curiosity loop for you. What's the next milestone? And why is it more transformative than even doubling to $200,000? In just a bit, I'll reveal the psychological unlock hidden at net worth milestone 2, and why it's the breath of fresh financial air most people spend their whole careers yearning for. But before we get there, one more myth to shatter, Getting to $100,000 feels like an eternity, but the $1 million mark is way closer than it appears once compounding snowballs. Let's transition to milestone number 2, and I'll show you how the script flips entirely. Okay, milestone 2, $650,000 the income replacer. You might not hear much about this number in financial media, but this is where your investments start earning what most people make at their actual jobs. United States Census Bureau data relays that in 2023, the median household income in the United States was approximately $78,000. To hit that with investment returns, you'd need about $975,000 at an 8% return. But even at $650,000 invested and growing at 8%, you're pulling in $52,000 a year, enough to replace a substantial portion of the average family's take-home pay. That's not just security, that's financial breathing room. And let's layer in the specifics. By year 22 at $500 per month with a 7% return, you're closing in on $600,000. If you stretch to $650,000, suddenly the math gets mouth-watering. Want to see exactly how your story changes at this point? Imagine this annual investment income jumps to $52,000. That's nearly $1,000 a week your wealth is earning. Whether you're on the clock or on vacation, it's not a fantasy. Plug these numbers into any reputable online compound interest calculator or run it for yourself. Here's your pattern, break a quick case studies. Lisa, a Money Masters community member, started investing at age 28 with $500 monthly. By 50, she hit $650,000. Her friend Mike waited until 35, and only Pesai reached $380,000 by the same age. That 7-year gap wasn't just wasted time. It cost Mike $25,000 a year in sa semestre. Lost growth by his 50s. Waiting costs more than your daily coffee habit ever will. If you wish you'd started earlier, hit the like button. No shame, most of us wish we could send this video back in time to our younger selves. So, how does $650,000 change your day-to-day mindset? For the first time, job loss is an inconvenience, not an existential threat. You can weather storms, take calculated entrepreneurial risks, or step away from toxic work environments. Because your money is finally working harder than you are, and your relationship with risk changes. You're no longer forced to play it safe, chained to paychecks. You can invest in yourself, launch that side hustle, travel, or simply enjoy more peace of mind, knowing your passive income covers a good chunk of your expenses. Here's a curiosity loop. It gets even better. What does it feel like when your net worth crosses $1 million? How does that unlock a completely new level of financial security, opportunity, and freedom? Especially in a world where inflation never waits for anyone. I'll show you play, with exact numbers and what-if scenarios you cannot afford to miss. But first, a quick recap of the numbers, since this is what separates content creators from genuine educators. For $650,000 at 8%, $52,000 annual investment income. Median United States family income. $78,000. To match that, you'd need about $975,000 earning 8% per year. All of these numbers assume historical market returns. But remember, past performance doesn't guarantee future results. That's why withdrawal rates of 4% to 5%, as recommended in Fidelity's 2023 retirement guidelines, are more conservative for sustainable income. And if you're factoring inflation, you want your portfolio to grow faster than you withdraw, targeting, say, living on 6% and reinvesting the rest, so your asset base keeps up with rising prices over decades. And don't forget Social Security. Even with uncertainty, the average benefit for retirees in 2024 is about $1,900 a month or $22,800 a year, according to SSA.gov. That can supplement your investment returns and make even a partial milestone feel much easier. Now, Milestone 3, $1 million, the psychological threshold. This isn't just about the money, it's about the psychological freedom and flood of options that come with it. Hitting $1 million, even adjusted for inflation, is still a gigantic leap. According to NerdWallet and historical S&P 500 data, with $500 monthly invested at 7%, you reach $1 million in just under 29 years. Suddenly, your returns alone can cover $40,000 to $50,000 a year in passive income, even at a conservative rate. That's the kind of income that replaces the need to clock in and fundamentally alters your relationship with work, worry, and ambition. Here's your second pattern break. Real scenario: Sarah, age 34, started at $500 a month and hit $1 million by her early 60s. She's not living a luxury lifestyle, but travel, healthcare, and supporting family are all possible without paycheck stress. When you're not making every decision from a place of anxiety, your entire set of options opens up. But reaching this $1 million milestone doesn't mean you can suddenly stop caring. In fact, it's where wealth building accelerates. Growing from $1 million to $1.5 million only takes a 50% portfolio return, and with sustained investing and typical market cycles, doubling to $2 million is entirely achievable in 7 to 10 more years, while doing very little different. The hard work is front-loaded, and now the math is truly bending in your favor. That brings us to a rapid-fire FAQ. And before that, jot these numbers down, or better yet, screenshot this next section. If you want a complete tracking system, grab my Wealth Milestones checklist linked in the description. It maps every year amount and step you need from $0 to $1 million and beyond. What if the markets crash? Yes, downturns happen sometimes severely, as in 2008, when the S&P 500 fell 37%. But investing through downturns literally lets you buy more shares at lower prices. Historically, the market always recovers, and those who stay invested benefit most when compounding resumes. What about inflation? That's why you invest in assets like stocks that historically outpace inflation. By living on less than your portfolio earns and reinvesting the surplus, you protect and grow your purchasing power. What if you're starting late? It's never too late to start. Even at 40 or 50, consistently investing even at higher amounts can set you up for significant milestones. And focusing on higher saving rates, optimizing expenses, and avoiding high fees will be even more critical. Let's land this plane with a third engagement. When did you first start investing, or are you still thinking about it? Comment your age below. The Money Masters community is here to cheer you on no matter your stage. And here's a myth to bust before we wrap. Most people believe that making small sacrifices like skipping lattes won't make a difference. But the lost opportunity cost of waiting a single year can be $41,000 over your Career. The cost of waiting is always bigger than the cost of starting small. And every dollar working for you now becomes a dollar working for you forever. If these numbers and milestones have already shifted your money mindset, give this video a like and subscribe, because the next video in this series will walk you through exactly how to optimize your first $100,000 with frameworks that make every step feel achievable, not overwhelming. Remember, all numbers are based on historical market averages and are for educational purposes only. Your results may be different, and you should always consult a licensed financial advisor for personalized guidance. Grab your milestone checklist below and keep stacking those small wins. The momentum is real. And so is your potential with compounding on your side. Quick recap, The 3 milestone net worth tipping points are $100,000, $650,000, and $1 million. Each phase transforms your journey from doing all the lifting yourself, to letting your money replace the hard work, to unlocking real financial autonomy. The math doesn't lie. $500 a month at 7% can get you all the way. But the earlier you start, the more you benefit. Action steps. Start investing whatever you can today. Even if it's just $100, set up automatic transfers to a tax-advantaged account with a provider like Vanguard or Fidelity. Log your milestones using my Wealth Milestones checklist, link in the description. Revisit your plan every quarter, adjust for any life changes, and celebrate every new 10K you cross. Track your progress in Mbase, especially at major tipping points. As 100K, 200K, 400K, 650K, 1 million. Use personal capital or Mint to automate tracking over the next month. Open your account, automate, and use the checklist. Over 6 months, increase contribution rate when possible, rebalance as needed, and revisit market performance versus your goals. Over a year, review your total net worth, compare against checklist, and join the Money Masters discussion in the comments. Progress won't feel dramatic at first, but after a few years, compounding takes over. By year 7, you'll see visible momentum, and by year 20, you'll be shocked what's possible. Results will track these historical averages if you stick with the plan. Although nothing is ever guaranteed, make sure you download the Wealth Milestones cheat sheet. It's your roadmap to understanding where you are and how far you've come. Subscribe for the next videos where we'll break down each milestone strategy with real-world examples and answer your questions from the comments. Engage. Share your investing start age below for support. And hit like if any of these myths surprised you. Let's build a wall of wisdom and accountability. Final disclaimer. This content is for educational purposes only and should not be considered investment advice. All calculations are based on historical averages and individual results may vary. Always consult a qualified financial advisor for personal guidance.